Your name is the name everybody breathes when they talk about the Mag 7 and Tesla and Nvidia. Dan Ives said this and Dan Ives said that. And you've been bullish and you've been pretty much right over the many years. This morning, I want to get to some of the headlines that I know are coming up. But, you know, what's on you? I didn't see your notes today. When you woke up this morning, what was the first thing you thought when you thought about this market after an incredible May?
I mean, Nicole, I think new all-time highs for tech are on the horizon because, in my opinion, you know, this is just the start of the next stage of the AI revolution playing out. And I think, look, the tariffs obviously continue to be in the background, and that's going to continue to come up in terms of the volatility. But I think the reality is, bark's going to be worse than the bite. And I think Trump administration further and further would just take steps back from the cliff. That's sort of our view.
Yeah, because originally you were very worried that we were pushed back decades with the Trump tariffs and all that. You were extremely worried. But now you're back to the rhetoric of new highs and the AI revolution, and you expect new highs for tech. When would that be? 6 months, 12 months?
I think close. I mean, I think as we get towards summer, you know, into fall, you're going to have deals on the table. You know, whether it's India, whether it's Vietnam, whether it's South Korea, at least some framework of deals. And then I think it speaks to where the spending is. I mean, you're going from chips now to software. And I think software is really going to be where, in terms of the AI revolution, it's going to be a huge driver. And then you look at the autonomous future, robotics. I mean, that right now is kind of going to be like where the next stages are of AI spend.
So generally you come on here and you like Nvidia and you like Microsoft and you like Zscaler and you like MongoDB and you like Palantir. These are all names that you've told me you like. Which of those names, and by the way, someone told me today, Google, they felt that was the least overvalued in the Mag 7. Which names, if someone said, I want to make some money, which names would you pick?
I mean, look, I believe on the cloud play, it continues to be Microsoft. That's the one. As we go into the next stage of AI, I think that could be a $500 plus stock. So to me, Microsoft's the one front and center that sits there. When you look on the software side, I believe Palantir next 2 to 3 years is $1 trillion market cap. I think that continues to be underestimated in terms of what they're doing and how they're really driving the future when it comes to core AI. And then we've talked about Nvidia, $4 trillion, then eventually $5 trillion. There's one chip in the world fueling AI, and it's the godfather of AI, Jensen, Nvidia.
Following Jefferies' designation of Nvidia as a top investment pick and its prediction that profit margins might reach 80% this year, the chipmaker's shares increased by roughly 3% on Tuesday morning. Citing the acceleration of next-generation Blackwell chips, Jefferies analyst Blaine Curtis elevated Nvidia to the company's highest conviction list. He believes that growing demand for Blackwell will lead to a sizable increase in margin. Nvidia's gross margins are currently around 61%, but Jefferies believes that if Blackwell volumes increase, they may reach 80%. It highlights Nvidia's strong pricing power and market position. Hardware margins like that are uncommon. According to the company, Nvidia has developed into a full-service provider of AI infrastructure, moving beyond the sale of individual chips. Its combination hardware, software, and system services are drawing in customers from hedge funds to hyperscale data centers. As AI workloads increase, it is anticipated that ongoing software licensing and extensive installations will support profitability. S&P Global Market Intelligence data shows that Nvidia's stock increased 24.1% in May. Nvidia's post-earnings rise only made up a modest percentage of May's gain, even though the company reported an earnings beat late in the month. Like many technology stocks, Nvidia saw a significant increase in value prior to the earnings release when tariff tensions subsided in mid-May with the announcement of a détente in the trade dispute between the United States and China, which opened the door for negotiations. The Trump administration also struck agreements for large sales of AI chips to Saudi Arabia and the United Arab Emirates at that time. Similar to several technology and semiconductor firms, Nvidia experienced a significant surge following the US and China's agreement on May 12th to reduce their tariffs on one another. In order to penalize China for the flow of fentanyl to the United States, the US reduced its duties on Chinese goods from 145% to just 30%. This includes the 10% universal tariff and an additional 20% tariff. Like the majority of stocks, particularly those in the technology sector, Nvidia surged on the announcement since these stocks had not yet fully recovered from the April 2nd Liberation Day stock market disaster. The news of the Trump administration's significant AI agreements with Saudi Arabia and the United Arab Emirates quickly followed the initial relief rally. Over the next few years, a 500 MW AI cluster made up of several 100,000 Nvidia GPUs will be installed in Saudi Arabia by Humain, a branch of the Saudi Arabia Public Investment Fund. Furthermore, an agreement was quickly negotiated with G42 of the United Arab Emirates, allowing Nvidia to begin shipping 500,000 Nvidia chips this year. These significant Middle East agreements likely raised Nvidia's growth projections, since the Trump administration formally abandoned the Biden administration's AI diffusion rule. The rule, which was set to take effect on May 15th, was intended to restrict the sale of AI chips to specific nations based on their level of goodwill to the United States and the possibility that the chips could be smuggled to enemies like China. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
And where do you think Nvidia will be priced one day?
Look, I think ultimately you're going to be looking at, $250 stock. As this all sort of plays out, near term 175 to 200. Obviously, tariffs clearly have derailed some of the growth in terms of China. But I don't think that story's done, right, in terms of the China piece. I think as you think about U.S.-China negotiations, getting back some of that's going to be key, because NVIDIA is not just handing that China business to Huawei.
I was terribly worried when you started to be really worried, and now you seem less worried. I just don't fully understand the turnaround unless you had a personal conversation with President Trump or something, which I wouldn't doubt. You really went from very worried, and you had some of our guests really worried, and now less so. You're back on it's going to be 2 trillion, 5 trillion, this will double. It just is. The tariffs are not going away. I mean, I think the tariffs are going to be here. They're just going to be less, but there's still going to be tariffs.
Yeah, but Nicole, if you go back to those dark days, that was really the tariffs that were on the table were, we're going to cut U.S. tech off at the knees. Then ultimately the 90-day reprieve, right. Clearly understanding that you're going to need to have significant deals. The China got de-escalated. I mean, I think when it's all said and done, you're going to have a 10% baseline tariff, and you'll have incremental reciprocal tariffs, 5, 10%. And that's digestible. But if you go back to that first week, and especially that first 2 weeks, till really Besant, took control of things, I mean, it was a scary time. I mean, you talked about that, but that's why it's so dramatically different relative to what was potentially on the table. To now, it's going to be a fraction.
Right, and we saw the board. We saw the board and some of those tariff numbers. That seemed right. It was a lot. It was a lot for Wall Street to take in without anybody.
However, the government increased obstacles to China while easing sales of chips to nations like Saudi Arabia and the United Arab Emirates. Nvidia's H20 chip, a modified Hopper version judged suitable for the Chinese market, was prohibited from being sold to China by the Trump administration in April. However, Nvidia was forced to charge $5.5 billion to its H20 inventory in the absence of replacement rules. Nvidia's fiscal first quarter ended in April and reported on May 28th exceeded forecasts despite the Hopper constraint. Overall, the findings appeared to comfort investors that the corporation should be able to handle geopolitical concerns and that the new Blackwell chip supply problems have mostly been fixed. Nvidia is trading at 44 times profits and 31 times anticipated earnings following its rebound in May. If Nvidia can continue to dominate AI systems and recover some of its lost revenue from China, that's a fair multiple. All eyes will be on Nvidia's new Blackwell processor this year, as well as how its clients develop innovative and fascinating AI application cases. On the risk side, investors should keep an eye out for more recent proprietary AI processors that the cloud giants have developed internally, as these could continue to gain market dominance. All eyes will be on Nvidia's new Blackwell processor this year, as well as how its clients develop innovative and fascinating AI application cases. On the risk side, investors should keep an eye out for more recent proprietary AI processors that the cloud giants have developed internally, as these could continue to gain market dominance. Even if Nvidia is now the industry leader in neutral GPUs that can be used for a wide range of applications, the development of bespoke chips that can handle workloads at far lower costs may eventually slow down Nvidia's explosive growth. The risk-reward ratio is therefore more balanced now that Nvidia's stock is back near its all-time highs. One of the greatest long-term investments ever made is Nvidia. The value of the chipmaker's shares has risen by around 340,000% since 1999. Over that period, a $3 initial investment would have grown to $1 million. However, the run is far from done. The company's sales should increase significantly over the next few decades, which will benefit patient investors. This is the reason. Sales of Nvidia will increase for many years to come. The core of the artificial intelligence AI revolution is Nvidia's commercial strategy. To function, almost all AI technologies need large data sets and processing capacity. This data is processed by sophisticated models to produce outputs that are pertinent to consumers. The most widely used models are run on the cloud, utilizing distributed computing capacity that can dynamically scale up and down in response to demand. However, other models can operate locally. Which technologies enable the infrastructure of cloud computing? GPUs, or graphics processing units as they are more widely known. Numerous businesses are manufacturing a wide range of GPUs, each with a specific function. Nvidia has long focused on GPUs designed for gaming settings. Computers and gaming consoles of the future require enormous amounts of graphics processing power. The business advanced because to specialized chips like Nvidia's, which gave customers access to better and more visually beautiful games. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
A basis of 81 cents a share, revenue top 44 billion. Their guidance, it's been received well. What's your takeaway?
Well, we knew that the situation with China was going to weigh very heavily on the outcome, and there were some people that were skeptical that with all the potential, write-downs related to China and then the future sales related to China, could they pull it off in this quarter, having had so little time to adjust to what was going on? And then, of course, what would guidance look like? I think the market was largely very satisfied with the fact that the company was able to pull off the number. They were able to beat top and bottom. Margins, if you exclude the write-down, actually ended up being just a little better than what were expected. And overall, the company was able to show this strength that even without access to that China market for a period of time, it has enough diversification, both in the customer base geographically and in its segments. And this, Diane, was probably one of the things that was interesting that wasn't mentioned by a lot of people was gaming saw great results.
Yeah.
Automotive had a 70+% year-on-year growth rate. And then, of course, even within data center, their networking bets are paying off because that kind of covered the shortfall in data center and enabled the company to make its result. So I think the market was largely satisfied. You could see it by the way it reacted both after hours, then in the next day, which often you see that fade.
It's true. Yes, in previous quarters and more recent times for Nvidia, even if they beat and raised, the stock is sold off the next day.
Yeah, well, first of all, there was this kind of period in time where this exuberance got to be so big, right? You go from 250%-ish growth rates to now, high mid double digits. But now you have to remember they're growing high mid double digits over those 250% growth rates. So the overall growth has been tremendous. The demand for the AI product services that NVIDIA offers is palpable. And this whole idea that there's a bubble in AI kind of continues to be put to rest each and every time that Jensen Huang and the NVIDIA executives announce their earnings. The bubble just doesn't exist. There are some consumption questions to ask about how this all gets consumed, but the fact of the matter is the CapEx numbers have been reiterated. The big companies, the Microsofts, Googles, Amazons, Metas, they're going to continue to spend. And now Jensen's talking about the future, and he's hitting numbers without one of the biggest AI markets at his disposal.
You mentioned consumption concerns. Tell me a little bit more about what you're thinking there.
Well, we have a few different challenges that are trying to be addressed as it pertains to AI. First of all, there is the power build out that is required. So we obviously are seeing these massive commitments, but we're going to need to build out the infrastructure, the roads and bridges that are going to enable AI at scale. But the other side of this is we've gone through earnings. Earnings have been largely good. The Mag 7 earnings outside of Tesla, which was a bit suspect, have been really good. And a lot of tech, Salesforce recently beat. ServiceNow had a blowout. But when you listen to their numbers, what's the impact of AI? Because enterprise AI, it's not just going to be these open AI, and it's not just going to be Meta, and it's not just going to be Google, people using search with AI. It's really going to be about this enterprise data, the data that IBM suggests 99% of it hasn't even been unlocked to AI yet. This data being consumed, meaning seeing dollars in earnings report where a company like Salesforce says X percentage of our revenue incrementally growing because of AI services that customers are buying, there's still a lot of questions. Have we built too much capacity? I don't believe it to be true.
Okay.
But the agent, for instance, the agentic trend line, the robotic and humanoid trend lines, the autonomous vehicle trend line, this is what's going to consume all this infrastructure. But because we have this global arms race, because the US and China are competing, because the biggest tech companies in the world want to make sure that they've built out the data centers of the future, the AI factories, as Jensen Huang likes to call them, they're all building so fast. But the revenues from every other tech company, and then the revenues from industrial companies, automotive companies, banks, where they can say AI is changing our business, it's making it more efficient, or we're growing productivity because of AI.
I want to ask you a little bit more about...
Before many of its rivals, Nvidia saw the potential of AI. It made significant investments to ensure that its software and processors could sustain the tiny but promising sector. According to the New York Times, Nvidia has established an almost unbeatable advantage in manufacturing chips that can carry out intricate artificial intelligence, AI, functions including speech, facial, and picture recognition, as well as creating text for chatbots like ChatGPT over the course of more than a decade. By anticipating the AI trend, customizing its chips for those activities, and then creating essential software to support AI development, the former industry upstart was able to acquire that domination. Perhaps Nvidia's greatest secret weapon is that software element. The AI market is expected to increase in value from several $100 billion to around $5 trillion over the course of the next 10 years. Although there will undoubtedly be more competition for GPUs, Nvidia's software has locked users in. For years, developers have been utilizing Nvidia's software to tailor these chips to their precise requirements, and scores of AI applications have been developed around its technology. This software lock-in could provide Nvidia a significant market share for decades to come, even if its hardware loses its competitive edge. It also gives it the reputation and funding it needs to keep upgrading its technology or acquire promising startups. Nvidia's stock is far from cheap, trading at 25 times revenue. However, shares also traded at over 25 times revenues in 2021, and since then, their value has climbed by almost 800%. Many contend that Nvidia will have more difficult obstacles to rapid expansion now that it is a $3.3 trillion company. This might be demonstrated via the law of huge numbers. After all, growing from a $200 billion business to a $2 trillion one is easier. However, Nvidia has a firm grip on the market. According to some estimates, their market share for AI GPUs is 90%. In the meantime, the AI sector is expanding rapidly, and Nvidia has a long-term advantage thanks to its software advantage. This type of high-multiple stock might exhibit tremendous volatility from year to year. However, if you have a 10-year or longer investment horizon, Nvidia shares can let you use compound interest to turn tiny sums into millions of dollars. Just keep in mind that the AI revolution is a multi-decade story, and it can take years before Nvidia's big upfront premium is completely justified. However, it's rarely a bad idea to purchase high-quality businesses with enduring competitive advantages that operate in markets with steady development. Just make sure you have enough time in your investment horizon to fully comprehend Nvidia's high initial valuation. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
have the operating leverage of the Mag 7.
Let me ask you your thoughts on this, because you mentioned the competitive landscape, but I'm curious about your views as it relates to that when you think about China. Jensen Huang, the CEO of NVIDIA, obviously came out and criticized the U.S. export controls, right? We've got very stringent export controls when it comes to China and any chips heading over there. Do you agree with his perspective that essentially this potentially gives China the ability to increase their position competitively?
Well, first of all, I agree with Jensen's position if I was the CEO of NVIDIA. And I think it's important that I sort of bifurcate the answer, because as a CEO and with the interest of the shareholders and with the interest of the continued diffusion of AI from the West to the world, Jensen is saying all the right things. Now, let me take a step back and act as a policymaker for just a moment here. This is actually very bipartisan. The chip controls, actually, the Biden administration, you could argue, had even more stringent controls.
Yeah. And they were going to put in the AI diffusion rule. But,
right.
But then, go ahead. Sorry.
No, absolutely. And under President Trump, he actually pulled back some of the diffusion rules, brought some significant investments out of the Middle East, which is an example of a region that we have complicated relationships with, but we're showing that we are willing to bring our best technology into those markets to create revenue for Western companies. It wasn't just NVIDIA, it was Cisco, it was Amazon, it was Grok. There was a number of different companies that benefited from that. But here's the thing. I'm constantly puzzled about the idea that China's not asserting all of its capabilities, all of its resources to build AI leadership. We hear about Huawei and what they're doing there.
Exactly.
We hear seeing what they're doing with DeepSeek. They have half the world's AI researchers. They're run by a communist party that can basically at any time, ask Jack Ma, make a decision to sort of change directions and how they enable capitalism to exist inside of its system. So even if NVIDIA wins, which I believe it has a bigger advantage than Jensen leads onto on the hardware, I believe it has a bigger advantage than Jensen leads onto because he's being a good head of state because he wants the relationship with China. I think CUDA is far more advanced than Huawei's CAN, which is their version of software. But in the end, I think the U.S. has to understand, the same reason we don't give them the advanced lithography of ASML, is that we need to decide when are we seeding them to be equally or more competitive than us versus when are we using protectionism to make sure that the U.S. and the West are able to gain a market advantage. I think policy will continue to be restrictive, protectionism will be in place, but I like what Jensen says, it's very important, is that we shouldn't be using protectionism as our goal. It should be a mechanism, but we should be driving to out-innovate China, to be the world's best AI technology that everyone wants to buy. Protectionism is a small cog in the wheel of market and global AI leadership.
Do you think that investment, the thousands of chips that are going to be going, for instance, to Saudi Arabia, helps soften the blow from the hole that the export controls chips to China creates?
I'm very optimistic about sovereign AI. So this plays a role in the question that you asked. Every major region in the world is going to build their proverbial AI factory, their AI data centers. It's a new architecture. There's massive amounts of data, massive amounts of throughput, and that's going to require a ton of energy and a ton of compute. So if I am Jensen Huang, you hear comments from people like Sam Altman. Sam Altman comes out and says things like, my GPUs are melting. He's literally saying, I can't get enough of this computing power. Yeah. We've heard Elon Musk say similar things. They've had issues with Grok and accelerating Grok because they can't get enough capacity. So I think if I'm Jensen Huang and I'm thinking about what I want to do right now, I might be considering, can we scale Blackwell faster? Because by the way, H20s are lagging technology. Blackwell is the future.
Yes.
Can we scale this, sell more of this into all these regions that want to build out AI? We heard about Taiwan. We're seeing it in the Middle East. We're hearing about it across Europe. I think there's a big opportunity there, but eventually the China market